Hello from the Trader Guy. This is a video that's being filmed on July 19th. Actually, we're just now starting to open up the next daily bar. So this is the 8 o'clock New York time. As we flip over to July 20th in the Forex markets, I wanted to do a video based upon the importance of paying attention to the long time frames, the higher time frames. And the reason is it's because we have had a pretty extensive move away from the franc on the 19th, and as such, it's very easy to get caught up in the noise. Now, you have to keep in mind that there are different traders out there doing different things, but it seems, at least in my personal opinion, that most traders are focusing on the next 15 minutes. And while that's nice, if you can make money every time you trade, the reality is, and this is being proven to me more and more the longer I trade, obviously you want to trade with the trend. The reason is quite simple. If you just look at a chart here, this is a line chart, this is a monthly chart. Look at this chart and tell me which direction would you rather be in. And even back here where it was fairly benign, all the way back from 92 in the Euro Swiss, you pretty much always wanted to short. There have been periods of retracements and stuff that you could have gotten a little bit of trouble, but when you look at the big picture, more times than not, when you sell the Euro Swiss, you are on the right side of the market. That is basically what I'm trying to impress upon you, and that's especially true since 2007, which we had peaked at about 167.5, and here we are at 116. And actually, we're even as low as 114 and some change just a couple days ago. So having said all of that, we look at this chart, even up from the weekly, and it's definitely in a downtrend. So when you get a day like this, it's very easy for people to get excited and to not really think about what's actually going on in the market. This type of move, and this I blame on leverage and Forex, this type of move looks pretty intense, and so does this one really. But in terms of percentage, like if you were trading stocks, it's not much at all. In fact, it's just a couple percent at best. So when you see moves like this, these are just pullbacks. Or even if you just want to focus on maybe this last run. Well, once we got this bounce here, it looks brutal and it looks like it's going to the sky. But when you put it in relationship to the latest move, you just take that out of the move. That's still a fairly significant move down. So by looking at the larger time frames, I hope that you can at least get some perspective on what may truly be going on in the currency markets. Now, on a day like this, like I said, a lot of people get excited because most traders are looking at the charts like this. They're looking at this 1 hour chart, for example, some even lower than that. They see the gap, they blow up through the gap, and it's like, wow, we're going to go up here and maybe break through this resistance. Look at all the other resistance areas that's broke through, and maybe even go up here or here, before we run into trouble. Now, the reality is, again, this is a market that you want to sell and not buy. So when you look at possible support and resistance areas, one area that I would have to look at here would be the 118, and the reason I chose that is because it is an area that has seen support recently. Makes sense. There is also the 120, which of course is a big, large, round psychological number. And you can, go on and on. You can see that something's going on in this neighborhood here. So we could split the difference and call it 123.50. But, obviously there's a zone there. So when you start to look at the charts like this, then you can start to think that there are specific zones you want to be involved in. And when you see this big candle up here, and a lot of people are getting excited right now, and they're thinking it's got at least a couple hundred pips to run, that's nice. But let's go ahead and mark this out how somebody who was interested in making money in the Forex market may. Go ahead and mark it out. These red zones will represent areas where you will look for shorting interest. In the meantime, and I do look at this as about a 200 pip zone just because it's support and there's obvious, there's some kind of movement going on there. I don't want to get wrapped up in a 200 pip move. Um, Not because I won't take 200 pips, because of course I will, but the problem you run into with that is, say you do it off a 4-hour chart. Well, you may be risking, you may, with your stops and everything, say you get a nice shooting star, it might be you're risking 90 pips to gain like 130 or something. So the risk reward doesn't really work out. So what you have to do is you have to look at these big spots in time. So when you see a move like this, don't get excited, because that's what happened with all these people here, and how that work out for them. It dropped 900 pips in short order after that. So don't be that guy or girl. Mark out spots on your chart like this and just wait for price to reach that. And you can do that on several different pairs. Another example is the Swiss franc against the British pound. Perfect example of a market that really took off today, but you can see there's a little something going on there. We'll see if something happens here, and if not, there's an area there, and so on. I know it looks really simple and very basic, but that's kind of the idea, because I like the idea that I have spots on my chart now that I know I'm looking for some type of price action or weakness or whatever to sell. And when I do that, I just walk away. I let it do its thing. I know that when I go with the trend, the odds are that not only will the trade move in my favor, but the odds are that the support will get broken through. Again, now, yes, there does come a point where the trend changes, but in the Forex world, it happens a lot less than people realize, actually. Because this trend here, you could say, started here, this meltdown, and then that's July of 2007. I'll go ahead and turn off the auto scroll here. As you can see, we had a sideways trend. It is a trend. It's, not an exciting one, but it is a trend. This started in 2003, so that was 4 years of, slightly upward bias, but not much. More or less range-bound trading. 2000 to 2003, we had a downtrend. We had an uptrend. This was a relatively short one from 98 to 2000. So you can see what I'm getting at. These trends don't change every week, and therefore you need to be aware of what the actual trend is and just trade in that direction, and wait for your time to get involved. For example, had you been shorting here and you saw a nice obvious trend line broken, that would have been your first hint that maybe this trend isn't going to hang on. But until you see that, my opinion is, why bother with it when you can simply just kind of bide your time, chill out, hang back. You've got more than one pair to trade. Don't act like that's a problem, and wait for these areas to get tested to continue the move down. You just do it, and it's like everything else. Short, rinse, repeat. Short, rinse, repeat. Eventually, yes, the trend does change. You keep an eye on longer term weekly trend lines, for example. And maybe you do get blown out on the last trade and you do lose some money there. But what if you get 6 or 7 or 8 or 9, 10 trades ahead of it that are all profitable or at least break even? Well, you're still making money. And that's the idea in Forex trading. So keep your eye on the longer term charts, because as you can see, they are excellent roadmaps, and they will guide you very confidently through the Forex market. This video was in response to some things I've seen on different Forex boards and stuff today, talking about how the trend might be changing. And as you can see, when you really look at it, we're a long way from changing. Pound Swiss, I'd want to see it up to about 145 before I'd even consider thinking about that. And even 145 is a little on the low end. We're probably looking more like 1.5, 155 before you really have to question the trend. So anyways, that was my thoughts when I saw all of this today, and just know that I will be looking for places to short currencies against the franc, namely the pound and the euro, as they arise. But I have picked out areas ahead of time, and I'm letting the market come to me, and then I'm seeing what it does when it gets to that spot. By trading this way, you take a lot of stress out, and the profitability really does increase. Thanks a lot.